Good morning, everyone. Welcome to the modern market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to hopefully make some or a lot of money on the internet. Load up for session today. We are talking Federal Reserve Chair Powell's comments yesterday on tariff increases, how that's affecting the stock market, the crypto market, and we're starting to look at gold increasingly. So we'll discuss the general thoughts there. We'll also talk about the big news in crypto universe yesterday. Base receiving huge backlash for launching a content coin. We'll describe what that is, what the intention was, what the general response has been, and the yo-yo price action, and try to come to some general thoughts there on what our takes are. We've also got Radium launching Pump Fund competitor. It launched yesterday. Ray, the token is up 12% on the day to 1.2 billion FDVs, up 40% in the last 7 days after people thought it would be over for Ray, after Pump Fund kind of started eating its lunch on the deck side too. So we'll be discussing that. There's a few runners going on that side. We will discuss everything and more in just a little bit. Got Legendary in the co-host seat with me today. Looking forward to get into the discussion. But just before we do, as usual, just a reminder, friends, nothing that we say here is financial advice. This market is so risky sometimes, and therefore, please proceed with caution, exercise your own judgment, and do your own research. With that out of the way, Ledge, it's Thursday. It is the 17th of April. How are you doing? How are you feeling?
GM doing quite well. The health maxing is still going strong.
Good.
I also made plans for the weekend. Now that we say this on the show already, by the way?
I don't know. Depends what you're going to say.
That we will take tomorrow off.
We have not said that.
That's a good thing to announce.
That is a good thing to announce. Not only will we not be around tomorrow for Good Friday, which I don't know if in other places they necessarily celebrate or take as a holiday, we'll also be off on, I think, Easter Monday. So we're going to have Friday off the show. We're going to have Monday off the show. I don't know what you're supposed to do with that spare time. Legendary, what are you going to do with the spare time?
Given the fact that I bought my first car this week, I will take it for a ride and explore the countryside a bit.
That'll be fun. That'll be very fun.
That will be fun indeed. You know, the one thing that I don't like about taking off the Friday and Monday, we've gotten into this beautiful rhythm where basically, so today is show number 489. So every Friday, it's either like 490, 495, 500.
We're going to mess up the numbers.
And we're going to mess up the numbers now. Yeah, that's very annoying.
Gosh, that's actually really bad. I would hate it. I mean, that's really, really annoying. So how do we fix that?
We either do a Saturday and a Sunday, or we have to take 3 more days off, which I really don't want to do.
We're going to have to do like 2 special edition shows to make up for it. I think that'll be fine. We can figure it out. We've got to make the numbers add up in the end. The math has to math.
English is asking in the comments, what did I buy? BMW X3M.
X3M. Crucial M towards the end. Where are you going to drive, Legendary?
Countryside. So going to go to Lower Austria, going to go to Styria, basically, or explore the western part of Austria, to put it without using state names that probably don't mean anything to anyone.
The western part. Okay. Good stuff. That sounds fun. That'll be enjoyable. I will be preparing for my trip tomorrow. I've got all kinds of admin to get done tomorrow before I fly to Dubai, which is pretty exciting. We'll be spending some extended time there again in advance of Token 2049. If you are going to be there, we will be doing not lunch, we'll be doing a breakfast. So if you are going to be in town, do shoot me or Legendary a message. Would love for our core listeners to be a part of it if you'd like to be, and we'll let you know when it is. Just send us a message. We've already started just checking in to see if certain people will be around. But, you know, very open for that to just be for anyone who wants to join us out of our listenership. So excited to meet people again face to face is always really, really nice. So let us know. Let's get into the main stuff though. As usual, starting with the price action at the top of the show to get us moving. We've got Bitcoin, which is flat at 84.4K. We've got ETH flat as well at just under 1.6. Got XRP flat at $2.10. BNB up 1% to 585. Solana up almost 6% to $133. Like to just give people an update on the 7-day. Bitcoin's up 3% in the last 7 days. ETH is flat on 7 days, and Solana is up 16% in the last 7 days. So ETH underperforming, which is what we've got used to, but just wanted to articulate that so people know once again. On the meme coin side of things, we've got Doge up a couple of percent. Trump is down a few percent. I think the unlocks, quite a significant set of unlocks, start up. We've reported on that a couple of days ago. I think that might be today, actually. Huge unlocks coming for that coin. We've got Bonk up a couple of percent. Fartcoin is flat at just under 90 cents. SPX, Murad's coin, is flat. WIF is flat. Pengu's up 5%. Not bad. Mostly green, actually, today. A bit more green than red on this side. Mulk, however, is down 8%. So that is not ideal. And getting into the headlines then, to get onto that side of things, we have, as we said, Federal Reserve Chair Powell saying that the tariff increases are significantly larger than anticipated. You can probably guess that cuts are not imminent, which is what a lot of people were hoping for. US stock market lost 1.5 trillion. Crypto is holding up pretty well. Gold is continuing to rise. Landry is going to give a bit of a breakdown there on what how he kind of sees that whole situation, what we need to know. We're also going to be talking about Base receiving a pretty big backlash for launching its content coin. Base is for everyone. They also launched another coin from their main account. The first one crashed down from 17 million to just a few million, then went up to 21 million. Now it's at 14. All kinds of consternation on the timeline. We will discuss that today and give our take. And then finally, Radium launches Pump Fund, launch competitor, Launch Lab, raise up 12% on the day. Legendary will explain what was going on there, what kind of activity you saw. Is it going to be worth dedicating some time to this new meme coin launcher? We'll discuss that towards the end of the show. Some notable price action. Wallet Connect sold off 35% after the initial surge to 500 million FDV after its TGE just a couple of days ago. Fartcoin showing relative strength at about 90 cents. That was up 7%. I think it's actually less than that now. This was when I wrote it this morning. And just in terms of the more major coins, Sol's up 7%. Hype is up 10% actually on the day. So Hype continuing to show some strength as well. We've been speaking about that ecosystem quite a lot. Landry, is there anything we need to know on the NFT side?
Yes, there is. The general market is pretty flat. There is one thing that is standing out, and I think it's one that you will like. It's the Infinix patrons. They are up 24% on the day and now sitting at a 3 ETH floor. That's kind of confirming your hypothesis that, you hold a couple of those, if I recall correctly, and that they're very, very strongly priced in ETH, very strongly priced in USD instead of being priced in ETH as to how they trade. But even in dollar terms, they are up quite well over the long run, because the way they work is, question to you.
Yes, so these are definitely priced in dollars because the raise was done in dollars. They raised, I believe it was 65 million in September of last year. You had 3 options of what price point you could come in on. It was either an implied FDV of around 100 mil, 300 mil, or 500 mil FDV, depending on what FDV you came in at, or what purchase price for the NFT you wanted to buy it at. You have different vesting schedules. So I unlock, because I went for the middle option, I unlock these NFTs over a period of time. So I think I bought 6 of them at 3K each. But I don't get them all at the same time. They vest over the year. And so what I think we're seeing from the market is they really want to trade at around 4 to 5K, which would be an implied FDV, because there's 100,000 of these NFTs. They sold 50% of the supply. There's 100,000 of them. They really want to trade in the 400 to 500 mil FDV region at the moment. Obviously, my position is that I think it will go higher. So that's that case, which is pretty. It's interesting. And so what happens is when ETH goes down quickly, they quickly become quite mispriced. I think if the market wants to trade it at 400 to 500 mil FDV, which is basically which was at one point a 2 ETH floor price. Now that ETH has crashed significantly, that same price is underpriced. So I think what we're just seeing is it getting bought up to around a price which is more in line with the FTV that people are thinking of. That's my reading of the situation anyway. Curious for your thoughts or any commentary.
Yeah, I think that is the typical case where people kind of forget that these assets exist, and then it just takes a bit until they reprice again in ETH terms to like maintain the same dollar floor. And when there's news coming out from the Infinex team in this case, and people once again get reminded, yeah, there was this thingy, there are the NFTs, let's check out the price, let's see what it looks like. And if the news are good and there's no reason to change this like implied or assumed valuation of 400 to 500 mil, and the floor price will correct again in this case to the upside.
It's a pretty interesting opportunity actually, because there's two. Remember when the ETH price was going down quickly, the thing that I did instinctively, there were two assets that I was looking at like a lot when ETH's going down quickly. Given that I have no particular position, I mean, I still hold some ETH. I have no particular position in ETH now. The thing that I'm most interested in is the assets, and there are certain assets still which there is no option for you to get access to in USD. Or no easy and obvious way. And so CryptoPunks is one, and something, and NFTs more generally. So when ETH moves down quickly, NFTs, which you think might have some kind of lasting value, will become quickly out of whack with their maybe underlying value. And so I was always keeping a close eye out on CryptoPunks. I'm pretty sure they probably went down to 60 something as a floor price at one point in time. I think it actually still might be there now because we've kind of settled at this ETH price. But for something like Infinex, where the value, there's like this additional value there, becomes even more obvious to keep an eye out if that is something that you're bullish on, and if that is something that you want to access from a dollar perspective.
Also, Kane, the Infinex founder, announced on his X that they are going to do a large-scale campaign with Kaito to increase their mind share. And Kane said he has now spent more time designing this Infinex Kaito campaign than he spent designing the first yield farming campaign for the staked ETH pool.
Interesting. Yeah, I mean, look, I've obviously been in the ecosystem for a long time. I did a tweet on it this morning, quote tweeting a tweet that I put out in September of 2024, which I shared my full thinking on it. Sometimes it's just the case that until things really take people's mind share, they're just not interested in it, and they're going to be too late. That's my specific thought when it comes to this one, and that's how I've expressed it by going in reasonably hard back in September. So let's see how we go. I'm pretty excited to see what they build, and I've used the product. It's quite good. Like you can switch. They call it switching, when you can just like trade across chain, and there's all kinds of ways that they want to allow people to access DeFi from within the app rather than having to keep like 20 tabs open on your computer. You can just go directly in. So I think it's pretty cool from that perspective. Getting into the rest of the Web3 roundup, there's some pretty interesting other bits of news today. We've got Russia Finance Ministry saying they should have their own stablecoins pegged to other currencies after USDT wallets were blocked last month. That was reported by Reuters. That's pretty interesting. Interesting to think that the way round USDT blocking would be with just a completely different set of stable coins, rather than maybe go to crypto, although it has been reported that they might be using crypto for some of their other transactions as well. We've spoken before, Ledge, what a diabolically difficult world it's going to be if everyone is going to be sending like 60 different types of stable coins to each other when trying to transact in different parts of the world, when really we were supposed to make things easier. And, international trade is going to kind of split off into various stable coins. So that was interesting news. Mantra team announced that the Mantra CEO, John Mullin, will burn his team allocation as part of the OM token support plan. That's obviously after the CoffeeZilla interview and the 90% decline in the price of this RWA L1. We reported on that for the last couple of days. Neutrl raised $5 million to tokenize access to OTC arbitrage. That was pretty interesting to see. Resolve Labs also announced a $10 million raise to empower DeFi users to access secure, transparent yield at the protocol layer. Futureverse announced the acquisition of Candy Digital and its portfolio of 4 million digital collectibles and customer base of 1.5 million accounts. Not good for ETH holders again. Bitcoin dominance hits a 4-year high at 63.98%. Showing that image on screen if you want to torture yourself as an ETH holder. And last couple of bits, Doodle's co-founder's new project token crashes as small account wins almost all of the pre-sale funds of 222 ETH. That was reported by Whale. That was all a little bit strange. The kind of extracurricular project from the co-founders of Doodles, whilst Doodles themselves are still working on their own token, I think. And then finally, OpenSea announced their ability to mint any NFT using native currency from another OpenSea supported chain. I think that's pretty cool integration. Although I don't know where their token has gone either. It kind of kept us waiting, got us hooked for a little bit, and now that has gone missing as well. Ledge, before we get into the main stuff today, any reflections here on the other bits of news before we get into the main stuff?
Absolutely. Yeah, I want to talk on Neutrl. I think this one is one that you might like a lot because it kind of ties into the conversation that we had on the opaqueness of the OTC markets in this space and how hard it is to know who is doing OTC deals for what tokens and what does that mean for token unlocks, for incentive alignment, et cetera, et cetera. And Neutrl is basically saying this is currently a $10 billion market of locked token deals, while we are in a market phase where DeFi yields are rather low. And this is exactly the market that they are tackling, or that they want to tackle with this raise. And they do want to grow to $2 billion in assets over the next couple of years. And the way they want to do it is they draw a bit inspiration from Ethena. They did come up with their own not stable coin, but synthetic dollar, which they call NUSD. And that NUSD is basically also reflecting the OTC arbitrage strategy that they will be employing. So basically that will be a yield-bearing synthetic dollar, which will generate those returns by arbitraging the discounted altcoin market by arbitraging the OTC markets.
Interesting. Is that something that you're interested in? Like when it comes to these synthetic dollars, how do you see that type of opportunity, which is clearly a more risky version of the other synthetic dollars, which is already a more risky version of an actual stablecoin? I think maybe you're not so keen on any of them based on your experience in crypto over the years. Does this change it? Do you like that? What's your thought?
I think this is a massive trust game when you look at it as an opportunity, because you will not have the full transparency of what's going on the OTC markets. So you will basically have to trust the team that they figure out actual arbitrage opportunities and they don't get screwed by trying to buy and sell across various over-the-counter deals and have done the math on the discounts, the unlocks, etc., right? And that this works out. And then the question is how high the yield is that you can realistically achieve with that, because there has to be a cap, right? If the whole market cap is $10 billion, they want to grow to $2 billion in assets. You can't do this with an infinite amount of money. So it will make a lot of sense for them to cap the amount of NUSD that the risk. In theory, I find it very interesting. I think in practice it can also work, but I honestly have no clue who the team is behind that. I just, clued up this morning by reading a bit more about them. So I like the opportunity, but it highly, highly depends on the people behind that, if this is something where I would be happy to allocate a bit of capital to or not.
Okay, that's interesting. My position, so people know, obviously you've got your normal stable coins, which you can do whatever with. They're the safest. Ethena, for me, I know you've been more skeptical about it. You're definitely just more professionally cautious, I'd say. I think Ethena has done an awesome job. They seem to have been quite resilient so far. So my position is I'm happy to take a proportion of my stable coins and park it with them. I have actually quite a significant exposure to USDE, which is Athena's synthetic dollar. The reason is I think there's all kinds of useful things to do with it. We've spoken about the opportunity on, what is the name? Ethereal. Ethereal is the DEX which they're building, which is a kind of hyperliquid competitor for the Ethena network, which is going to be their chain. It's called Converge. It's got all kinds of other big players involved. Ethereal is the only tokenless protocol that is getting kind of marketed along with all of these other really big names like Arve's there, there are other names. I know Arve's the biggest names. That's the one that I remember, but there are all kinds of other big names there as well. And Ethereal is the only tokenless opportunity. So I've parked a significant amount, just providing liquidity. And at the moment, that's all you need to do. Just earning the points, put my USDE into Ethereal. And I think season 0 ends in May. So in 1 month's time. Maybe there'll be more seasons. Maybe there'll be a token in May. I don't know. I'm just kind of happy to park it there. I find it helpful. But the other reason why, again, this is like constantly de-risking in my mind for Ethena, although, you obviously never know in this space. The Plasma had this news just a couple of days ago. Remember, if you don't know, Plasma is the stablecoin. Well, they're marketing themselves as the stablecoin chain. It is very much backed by Tether. It's angeled with Paolo from Tether. Kobe's involved. I think there are some other very significant investors who are backing it. They want to create this bespoke chain for not only USDT, but to get stablecoins moving. And in my mind, I thought, okay, well, this is so heavily backed by Tether. Maybe that means the other ones are going to get blocked out somehow. Well, they're not going to be prioritized, right? Because they've got such a close link to Tether. Even the coloring of the branding is kind of in line with the green from Tether. I'm showing it on the screen for the people who are watching in. They had this interesting announcement just a couple of days ago, which I tweeted about, saying how they've got a big partner with Ethena. I didn't understand it at first, but then they went on to explain why they are not shutting out Ethena, or in my mind, this was the explanation. They said, first, of course, Ethena is not a stablecoin. It is a synthetic dollar. And 2, what that means is Ethena allows USDE holders to access the basis carry trade, of which 70% of perpetual swap volume is denominated in USDT. So it is actually mutually beneficial for Ethena and Plasma to work together, because Ethena needs Tether on the other side of the trade, and Ethena creates structural demand for USDT because so much of the basis and carry trade is done in USDT. So I hadn't really worked through that in my head as hugely, but I thought that was kind of significant. And again, as you're kind of peeling the layers away of like, okay, they kind of pass this test, they pass another test, they pass another test. It just feels like it gave me one extra reason to think that, just slightly more comfortable holding USD. As I said, never know for sure, but that was just another one. Curious for your thoughts on that specific integration with Plasma, which I thought was a very big deal.
Yeah, that one is a very big deal. I like it a lot. And also to the part that you said before with the airdrop farming aspect, like the tokenless protocol aspect of it, that's the one that I'm also interested to seize and put capital to, because as you said, with like the majority of my stablecoin holdings, I moved them to euro either way, because I just don't want to have that much dollar exposure anymore. And this is the part where I've been most conservative. But similarly on how I use some of my stables to farm protocols on Sonic, because I view them as a like airdrop generating vehicle, I do very much am open to do the same with the Ethena side of things. But that's the basically difference in our portfolio allocation, so to say, is that I am not holding the cold stables in USDE.
Yeah, fair enough. I think that's fine. Okay, that's good to get on top of that. As we said, we're going to try after that show on Wednesday, where we just basically threw the notes out and just talked about opportunities the whole show. We are going to make it slightly more personal with insights as we go through. Before we get into the main stuff today, Ledge, just one final opportunity. You mentioned to try to highlight more opportunities that we're seeing or that we're doing. You mentioned Sonic again. If you had to highlight something that you're looking at this week or something that you are finding attractive, is it still Sonic? Is it anything else? What would you want to highlight?
From the stable side of things, still Sonic is still very much like the Aave Pendle combination. I still think Pendle is a very interesting protocol to explore and understand how to use that.
Okay, fair enough. As I said, I think Ethereal for me as a lazy farm is still one of the best things for me at the moment. We'll continue to discuss those types of things. And finally, just before we get into the main headline today, you might find this interesting from an opportunity perspective as well. We're just going to do our Polkadot explorations. It's kind of big news on the Polkadot side of things about Gigadot. What a name as well. Great name, legendary. What do we need to know here?
Yeah, absolutely. Polkadot's main DeFi protocol, Hydration, just a couple of days ago launched Gigadot, which is a powerful new way to earn boosted yield on your DOT holdings. So let's dive into it. GDOT is essentially DOT but on steroids. It tracks the price of DOT while generating yield from multiple DeFi sources simultaneously. So how does it work exactly? Gigadot derives its yield from 4 distinct sources. First, the staking rewards through the VDOT component, capturing the current around 12% APR from securing the network. Then the second layer is lending interest via the A-Dot component, earning interest paid by borrowers of DOT. The third one is trading fees. Basically, the trading fees which are accrued in the V-Dot and A-Dot pool are shared with the holders. And then last but not least, DeFi incentives. These are additional rewards which are allocated by Hydration and Polkadot treasuries when available. And all those 4 things together, they result in this compounded yield that you will get from basically putting your GDOT to work in the strategy. Talking about yield, let's take a look at the stats. It's a pretty high yield, currently offering solid 12% APY. Just to keep in mind, this is without looping. You could still go on a loop and basically borrow against that, and then go into GDOT again to just have an additional multiplier on the yield. It's flexible and liquid. There are no lockup periods. You can buy GDOT with any asset and withdraw at any time. And the TVL is already at 7.3 million very, very shortly after launch. Yesterday, I was looking at it, was at 4 mil. So there is money flowing into that. That is everything to know on the yield side of things. Just to also cover the risks, they are comparatively low since it's pegged to DOT's price. However, typical DeFi risks still apply. Because there's also the 4 ways of how yield is accumulated. You will also have some sort of lending risk exposure, et cetera, in the background. But if you're looking to supercharge your DOT yield with that amount of flexibility and manageable risk, GDOT could be a pretty interesting option.
I like it. Very interesting. All kinds of interesting loops and opportunities on Polkadot at the moment. Funky, your hand is raised. I know that you shared a really cool one with us the other day. It went, I think, viral on the timeline. What's your comment here? What are your thoughts on Gigadot?
You guys did a great job covering everything with Gigadot. One thing I just wanted to point out, so sometimes people are going to hear the 12% APY, for instance, right? And you think, okay, well, DOT pays like, say, 14% for staking. But what's actually happening in addition to that APY is you're actually accruing value to the token itself. So VDOT, as you guys noted, which is the LST of stake DOT through Bifrost, that actually, if you render that for more DOT, it trends up over time. So the same thing is going to happen with Gigadot. So I jumped in yesterday. I took out some of my DOT from one of the pools in Hydration. I just converted to Gigadot at a 1-to-1 ratio because I was right in the beginning. Now, if I wait 6 months, for instance, and I go and take out that DOT or the Gigadot and swap back to regular DOT, I will have a significant amount more of regular DOT because it is accruing to the token itself. So it's really a powerful strategy. If you're exploring the ecosystem, it's not something I threw all my DOT into, admittedly, right? Because I am so kind of cautious and conservative. But I just took like several hundred DOT, threw it in there just to kind of play around with it and see what happens. And I'm going to check back in 6 months and see how much it's worth. Because VDOT trends up against DOT over time. So knowing that it's VDOT and ADOT combined, it's probably going to have an even significant or greater compounding effect for the regular DOT when you change it back.
I like it. Excellent additional information. Love the auto compounding effect, I guess, which is always good to integrate. Appreciate that, Funk. Let's keep it going. We want to hit the main headlines as usual now. Ledge, we're going to come straight to you. For the general macro markets, we want to talk a little bit stocks here. We want to talk Jay Powell. We want to talk crypto and maybe even touch on gold again. Where do you want to take this?
Yeah, absolutely. Let's take a look at what happened, because the markets are down another 1.5 trillion as this fight for power between Jay Powell and President Donald Trump is becoming more and more intense. So yesterday, as part of Jay Powell's Wednesday notes, he said a couple of things. One of which is that he expects President Trump's tariff campaign to further push inflation. He also said that they see those inflation risks, but won't necessarily step in to help financial markets with lower interest rates if stocks plummeted. And the tariffs threaten to slow the economy while pushing up inflation, which puts the Fed in a very difficult position since its monetary policy tools can only help with one of those problems at a time. And then Jay Powell also went to say that the tariffs are larger than forecasters had expected, certainly larger than we, aka the Fed, expected, even in our upside case. And as a result of that, saying that they're very unlikely to cut interest rates. Taking a quick look at poly market, obviously those markets reacted immediately when it comes to the question of the Fed decision in May. The no change chance is now up to 88%. Back in March, it was basically a coin flip between a 25 bips decrease or no change. But now the market is very, very strongly leaning that interest rates are going to stay high. As I said, that led to the stock markets plummeting a bit more. Just taking a quick look at the S&P 500, we see Apple, Amazon, Microsoft being down anywhere between 3 and 4%. Nvidia, that is also as a result of the news that we covered yesterday, that they have to pay $5.5 billion in that licensing or export license fee to China is down 7%. So it's been a bit hit way harder. Today, Donald Trump came back on Truth Social to reply to that. And I'm just going to read the post. Donald Trump says, the ECB is expected to cut interest rates for the 7th time, and yet too late. Jerome Powell of the Fed, who's always too late and wrong, yesterday issued a report which was another and typical complete mess. Oil prices are down, groceries, even eggs are down, and the USA is getting rich on tariffs. Too late, should have lowered interest rates like the ECB long ago, but he should certainly lower them now. Powell's termination cannot come fast enough. So pretty strong words also coming from Donald Trump, which in my personal opinion shows how much he is pushing to see those interest rates being lowered. And if I had to pay more color to it, that post almost sounds a bit desperate in the way that it is worded. Going on to the other side of things that you mentioned, gold, and kind of continuing the conversation yesterday, because the question is, what asset are people buying right now? Crypto is stable. Stock markets are trending down. The asset is trending up. Is gold? We said it yesterday. Gold price did hit an all-time high at 3.3K per fine ounce. That basically puts gold up at a 10% gain over the last 30 days, which for an asset like gold is insane. Also up 40% over the year, which is a very significant move for gold. It typically does not move that strongly. And there's also an interesting, and that's the last piece of data that I want to share for now. Interesting, what's the name again? Interesting question on poly market going on. What price will gold close at in 2025? And more than 60% believe that it's going to trend, that's going to trade above 3.2K, which is a strong indicator to say that this trend for gold will continue, or at least hold over the course of the year. And the market, or poly market, that's of 350K volume, is not expecting gold to dump anytime soon.
Interesting. Thanks very much for the summary. All kinds of follow-on questions, perhaps. Okay, what are our thoughts? Going straight to the Trump tweet, maybe. And would love to get Stats involved in this conversation just after this question as well. What are our thoughts on the tweet? You mentioned, you said it kind of seemed a bit desperate. it's clear what the intention is, right? They just want rates down immediately. Like they want rates down yesterday, basically, and that is not what is happening. So when you think through what the consequences of that are, along with this escalating trade war with China, we spoke yesterday about how, okay, so America are going to stop the chips, and you touched on Nvidia kind of responding to that. China, we're going to stop taking Boeing. I believe that was part of some type of retaliation on the trade side. Where do we go from here? Like, are we just gonna? You said the poly market for gold is gonna. People are betting that it's gonna stay high for longer. It's gonna be a multi-month thing, isn't it? That's what I'm thinking. Yesterday, I kind of went into the Brexit conversation, or though I appreciate this is way bigger than Brexit. The parallel for me was the idea that, or the parallel for me was all kinds of things kind of falling apart through Brexit, and then the time that it took to start to piece it all back together, and it ends up just being so much longer than anyone thinks. And so that was where I started to think, okay, this is kind of similar. What are your thoughts there?
Yeah, it's kind of similar, and the thing is that there's like also multiple battlefields at the same time. On the one hand, as you said, there's the interest rate part of the discussion. Then we have the treasury yields, the 10-year yields, which is something that this administration also wants to get lower, and they are still very high at 4.3%. That again is to do. The reason why you want to see that number lower for the bonds market is because the US has to refinance part of its debt towards the end of the year. Then you obviously still have the trade war with mainly China, and as part of that, we've also seen some talkings around the deals that the US is currently working on with those 70 countries that allegedly include some sort of additional restrictions for China. So if you want to strike a deal with the US as a country which is not China, you will have to have some measures in there that are to the detriment of China, which is
That's really important to point out.
Yeah, to single out and isolate China. So those are like the three main battlefields that I see right now. And Trump is not really at this moment in time winning on any of them. Like the trade war still goes on, stocks are plummeting, the 10-year yield is still high. The Fed is now saying that they're not cutting rates anytime soon. So then probably his natural reaction is to go out and blame Jay Powell and say, yeah, he's the worst. He should have cut rates long ago because I'm doing everything for the States, but he's like, quote unquote, fighting against me.
Yeah. Okay, I want to do five more minutes on this. Leslie, I'm going to come back to you in a second to ask, like, what's the implication for crypto? Like, why is crypto holding up so well in your opinion? But first, I want to bring Stats into the conversation. Sam, welcome to the stage, my man. How are you kind of viewing all this stuff? I think one of the things we were kind of concluding is that we really just do not know what's going on. Not necessarily sure if anyone does perfectly. How are you viewing it at the moment? What lens are you looking at it through?
Man, I'm not even sure. You know, look, I think there are a few different things that I'm kind of thinking about. One is that I think there's a lot of question about why these tariffs were put on in the first place, and you know, I think it's pretty clear that the tariffs are there because Trump really believes that tariffs are going to solve a lot of America's problems through revenue generation and through kind of, I guess, reshoring certain industries. So I think that's much more the case right now than that that this is some negotiation tactic for something we're not sure of, or that he's trying to deliberately lower rates. Or I think those are more side effects than what's really happening. I think with Jerome Powell, like, he clearly does not like, and this is true. If you actually read, like, I read the Volcker biography. If you read like Fed chairs historically, they really don't like presidents telling them what to do. Like, that group of people takes a lot of pride in their independence. So I think that Powell, even though Trump was the person who put him in the position, you know, in his last term, I think Powell really does not like this idea of Trump trying to tell the Fed chair how he should be doing his job. So I actually think the way that Trump kind of is constantly fussing about him is not really like very strategic, because I don't think that Powell there are just a lot of videos of Powell talking where he clearly does not resents it and does not feel swayed by it whatsoever. Is that contributing to his decision making? Like, who knows? It's very possible that he just thinks that that there's too much uncertainty about inflation right now to lower rates. He said one thing. He said, we want to make sure that the inflation from tariffs is a one-off as opposed to ongoing. And my read on that is that he thinks that lowering rates could potentially lead to more inflation in the future, which isn't. And he doesn't think there's enough data right now to say that that's not true. And then the third thing that I'm thinking about and focused on is how much does Trump care about markets? And I think there's really this concept of a Trump put in the last term, which was the basic idea that if markets went down, markets were kind of the scoreboard that Trump evaluated his own performance on, and that if markets went down, he would do whatever it took to make sure that markets kind of rose and that he did things in a market-friendly way. And all the rhetoric from the administration right now, all the way down to Bessent, is that, not down to Bessent, but including Bessent, who's a markets guy, is we have spent a lot of time worried about Wall Street, but now we care about Main Street. So it really feels like they have shifted from this kind of goal of making markets do well to this markets actually to saying that markets aren't what they're optimizing for. Markets and Jerome Powell are two things that Donald Trump cannot control right now, and unsurprisingly, they're two things that he's actually saying he doesn't care that much about. So I don't know. Those are a bunch of different thoughts, but so some of the things on my mind here.
Really interesting. I appreciate the thoughts. Maybe a follow up from me. You mentioned what maybe the historical scoreboard for them has been the stock market. And if that isn't going to be the case now, what do you think might be the case? I know it's very difficult to answer because I'm not necessarily sure that they are super clear. I know they obviously make this distinction between, they've made two distinctions. They've called the markets being a Mag 7 problem, not a MAGA problem. They've talked about Main Street versus Wall Street. So that they are kind of delineating these two groups in some way. But what do you think that the scoreboard actually is at this point?
I mean, since you said it, I'm just going to say it too. That Mag 7 line is the dumbest line I've heard this administration say. Like, this market route is not limited to the large caps. It is happening at the small caps as well. It is happening across the board. And he said that when Scott Bessent has said that in the past, what he's saying is that the reason stocks are down is because of DeepSeek in China. Because DeepSeek is threatened, which was like what drove a one-day down move. He was saying like the reason that markets are down is because this DeepSeek threat, as opposed to the tariffs, which is just nonsensical. So I don't buy that. And I think the question you're asking, like, if you actually listen to the All In podcast where they had a couple liberals kind of come in and debate Chamath and Dave Sachs, this was kind of the question the entire time: is what are optimized for here? And I think Chamath came out with a few kind of like subjective types of things, like onshoring a bunch of industries that are super critical. I don't know. It's very, very hard to say. I think the things that this administration claims are its priorities do shift a bit. And they talk about fentanyl and fentanyl being the big issue, but that doesn't really explain most of the tariffs. I think maybe perhaps it's really just this relationship with China. I mean, who knows? But what is the metric that if I were kind of to try to put something there, like, which I don't think is the metric they're looking at, but what is the metric that they're looking at that will say that this was successful? What is the chart that, if it's fixed in 2 to 3 years, will say that this strategy was successful? I think that's always an interesting question. I don't know what it is. One that I could potentially say, if I wanted to kind of give a generous interpretation, is like the Gini coefficient in America, which is the wealth gap. A lot of what they're saying is that, one thing that is clear is that the wealth gap has grown substantially for the past few decades. I think that is the chart that really describes a lot of the problems that we're having right now, even though part of the problem is people don't want to say that, because the solution is more socialism, more socialist type tactics, like saying, let's distribute from the rich to the poor, obviously, or you could say, this onshoring effort is with that goal in mind. But that's what I would say if I were trying to rebrand. How do we make it so there's a bit less of a wealth gap in this country. But it's very hard to say because the tone and the metrics they seem to be measuring about the things that they seem to care about. Again, they said that the reason they did the tariffs on Canada was because of fentanyl. We haven't heard about fentanyl that much since, but a lot of these tariffs make no sense in the context of fentanyl. But if it's obviously getting more factory jobs, more manufacturing jobs, maybe there's a manufacturing chart that they want. I really just don't know.
Look, all loads and loads of good points there on the fentanyl thing. I completely agree. And just to go to your point about like what were the 4 things that was mentioned in the podcast that Chamath said, and interestingly, this was actually achieved kind of consensus when Chamath went through and said like, okay, well, these are the metrics that I would suggest. He actually got consensus from both sides. The more liberal members on the debate were kind of like, yeah, do you know what, we'd go with that. But the problem was, I think, that these tariffs are not achieving those things. Just for summary for the people who are listening in, the 4 things were focus on the AI supply chain, so emphasizing the need to bring AI related manufacturing and infra back to the US, or just making sure it's really strong in that department. Second is energy, focusing on domestic energy production to ensure self-sufficiency. The third was critical minerals and rare earths, which we've heard being spoke about a lot more. And the fourth was pharma APIs, so onshoring production of critical drug components. And when those 4 things were said, people were kind of in agreement. Like that's all sounds good and well, but these things are going beyond achieving those specific objectives.
Yeah, the reason I didn't like that response, I mean, I didn't mind it, but the reason I didn't like it is because it's not a metric. Like it's very subjective. What obviously the entire AI chain.
There are 4 sectors to focus on rather than saying how you even are successful in those sectors, right?
Yeah, saying like this is the chart that would show that we have kind of succeeded here. But I think the irony of it is after they put so much attention on the AI chain, the AI supply chain, was the very next day was the day that it was really the AI chain that got the exemptions from the China tariffs. So literally less than 24 hours after that thing was released. So and it was Chamath talking. And even David Sachs, even though he's part of the administration, I don't really think that what he works on is related to a lot of these goals. But yeah, what bothered me as kind of like a numbers person was I was like, that's very hard to quantify. That's hard to say, was this successful or not?
Sure. Want some more numbers. I think that's interesting. Okay, final question. Back to you, Legendary, on the crypto side of things before we really want to get into the base stuff. We've only got 5 minutes left today. Just why is crypto holding up so well here then? If stocks are selling off more based on on everything that's going on, and obviously there's a number of factors of why those things are happening. The point is, like, crypto is holding up relatively well, right? Bitcoin is doing fine. Obviously, gold is outperforming, but why do you think crypto is doing better here? Do you think that's going to continue?
Okay, there's 2 questions there. Do I think it's going to continue? No. I think if this goes on, crypto is going to trend down again, at least in the short term. The other question, why I think it's holding up pretty well over the last couple of days, especially the last 2 days, might have something to do with the fact that we had this other news, which we covered on the show this week, that the administration is looking to either sell some of their gold to buy BTC, or has speculated about using parts of the tariff revenue to buy Bitcoin. So maybe there's this hope that this active buying is going to happen rather soonish, because the news came out this week, which is balancing out the fact that stocks are dumping. And I think Stats had this post a while ago showing that the Nasdaq and Bitcoin are pretty significantly correlated. And maybe this is kind of offsetting this for the time being, just this hope or expectation of potential active government buys, and that being the reason why BTC is not dumping over the last couple of days. That would be my guess if I had to make one.
Okay, interesting. I've just got a final take on this before we get into the next headline, which we really got to touch on because I think it was interesting. But I personally think I like the first part of the Web3 Roundup today, where we spoke about, where just touched on the Russian finance ministry saying they should have their own stablecoins pegged to different currencies after USDT wallets were blocked last month. And I think one of the thing, and this is kind of this is the end game for Bitcoin, right? I think the end game is supposed to be that it becomes an asset which is outside of political forces. People are not going to get blocked, and everything that's going on in the world is definitely leading towards an environment where of mistrust in on an international level, and people want to be able to control the money and not have their stuff frozen every 5 minutes. So I think there's two things that have happened with specifically with Russia that Reuters have reported in the last few months. One is that it's been reported that they've been using crypto already for oil, I believe. And then the second thing was this news today where apparently these USDT wallets were blocked. And so now they want to think about how stablecoins pegged to other currencies might be implementable in some way. So I think both of those things are interesting. I think they both point towards Bitcoin. I don't know how far along they are with their plans of multiple stablecoins linked to all different kinds of currencies. My view has always been if there was demand for other stablecoins, they would probably already exist. The demand is definitely concentrated in the dollar. Now we've got the euro, which is delivered by Circle. So I want to see that exist for longer, and I want to check those numbers to see how much real demand there is for the euro. But for example, if there was any demand for a British pound to be on chain, it would already be there because a private company would have done it. I don't think the demand is there. I don't think there'll be demand for other currencies to be on chain as much as people might want them to be. And sure, people can offer them. But when you're talking about transnational trade, people still won't want to hold other currencies. I think it will still be the dollar, and I think it will still be, well, potentially Bitcoin. That's my thinking. Funky, your hand is raised. Come in with the final take here, and then we've got to get onto the base stuff, I think.
Yeah, so real interesting. Very quickly, yesterday I was in the capital of Tallahassee here in Florida with doing some political meetings. One of the people in our group was Byte Federal, which is one of the largest Bitcoin ATMs. To your point, B, it seems to be, even though this is a much smaller scale, it is something where people are using Bitcoin to send international remittances and so on and so forth. They have stable coins. They have all that stuff in their ATMs. Most of it is used for remittances. He said 99% of it is Bitcoin. They just do Bitcoin. They send it off to other, family across borders internationally. So yeah, I think that's like I said, every Bitcoiner's fever dream is for Bitcoin to become the standard for international trade.
Yeah, I can see that. So it's definitely one of the things I can see happening. I think we're kind of accelerating towards that. Interesting stuff. Look, we've only got, we've run out of time completely, but we've got to just touch on the base stuff. I'm not going to deliver this in the full way that we would have liked to, but that was definitely one of the biggest pieces of news from yesterday, which is this base backlash for launching the coin. Base is for everyone. That was the name of the coin. It went from 0 to 17 mil to 1 mil to 1 or 2 mil. Then it went back to 21 mil, back down to 12. It was very controversial because people did not believe that Coinbase or the base account itself should be kind of launching coins themselves. They kind of couched it in their own viewpoint, which was this is not a meme coin. Their perspective is that this is a content coin, sorry, not a culture coin, a content coin. The difference being a content coin is one piece of content, whereas a meme coin is an aggregation of content. Content coin is singular value, whereas meme coin is aggregated value. With a content coin, there are no expectations, whereas a meme coin is high expectations. It's just some of the differences that they tried to differentiate in this image, which we've shared on screen as well. They literally provided like this little table of how to think about a content coin and how to think about a meme coin and why a content coin is okay, whereas meme coins are obviously different, maybe far more volatile. And they also put out another piece, someone else at the base team, I think, just kind of sharing that, like, if you don't get this, basically you don't understand. Content coins are not built on speculation. Meme coins carry high expectations. This is not that. And so, look, we don't have a lot of time to get into this, but I guess the point was that the base group seemed to think that this is a good way for content to go. Their objective is to bring everything on chain, frankly, whether that's content or other things too. I think that is their objective. And I think there are two objections mainly from other people. One is, okay, first objection is that the price went down. Let's just say that. So the price went down after it went live, which means that people were not happy. So the price is not allowed to go down. So taking that one out of the equation, because that is a stupid objection, because all the prices go up and down in the space. If you're going to launch something, the price will go up and down. But I guess the reason why that's relevant is because you're putting this burden on creators who, when they create something, they're now going to have this asset that's behaving in a speculative way. And I think a lot of creators came out, including myself. Actually, my general perspective was that this is not particularly interesting to me because I don't think it serves. I don't think it serves our audience. So the thing that I said specifically this morning was, I don't think you can so easily tell others to have no expectations in our current environment. It seems divorced from reality. Having said that, two other things can be true. I still like the idea of thoughtful tokenized media. I think that's going to be big in the future. I think that will be a good way for creators to monetize with a Web3 component. But it is also true that buyers cannot buy things that they will not like if the price goes down. I think that was at least a strong reason why the overreaction was so strong, was because the price went down. If the price had gone up, people would not have reacted so strongly. My position is slightly more with my business hat on, which is I don't actually think it's a good model for creators to try to monetize when it's going to behave in a speculative way. I do think tokenized media will be important moving forward. That is my short take, because we're running out of time. I just want to check in with you. I guess people in the YouTube comments are guessing already how you are feeling based on your facial responses. But what do you want to say here?
Yeah, English is reading me perfectly. He said Legendary can't hide how much BS he thinks this is on his face. And even if you look at the post by Jesse, where he says, like, he's contradicting himself in his little table. He says there's no expectations on the one hand, but on the other hand, the big content coins can turn into memes where they suddenly, and the memes in his table aggregate value. People have high expectation. So there has to be a process where something then goes from no expectation to high expectation. So people will buy it with the expectation that it might turn into a meme, it might then pump. And per se, a coin that people can trade and speculate on cannot exist without, they cannot exist in a vacuum where people don't speculate on it. And if they speculate on it, they have expectations. So I get this, and I get this, that they try to frame it differently and like push another narrative to it. But ultimately it's the same. Like, people will buy this, or buy any content, meme coin, culture coin, no matter how you call these things, because they hope that someone else will buy it at a higher price, and they can potentially at some point realize some profits and dump on someone who has bought after them.
Yeah. Interesting. Yeah. I mean, I think the way to do this, and we've already started experimenting it, not saying we've done it perfectly at all, but it's a model that we're going to be thinking about more moving forward. I feel like Zora's version 1 had already dealt with this in a beautiful way. Zora now is this kind of create coins, like coin every piece of content. That feels like the direction they've gone in. Whereas before, that original model was instead take the Web2 Instagram like and turn that into a cheap mint. Like, if you like this, mint it for like $2. That's it. As a open edition NFT, no pressure, no strings attached, nothing beyond that. Whereas turning it into a coin is a very different thing. But I feel like that original vision is exactly how you would like to tokenize content moving forward, where sure, you can create a whole gallery of whether it's art, whether it's podcasts, whether it's something else. And if someone wants to support you, they can just mint for $1 or $2 or less. And that is truly no expectations, because it is it is open edition and it is low cost. Those two things together make no expectations. Unless you then put some expectations on top of it. The nature of this space, the reality of this space, is that the expectations created when it turns into that ERC20 and you start to go into Deck Screener to see how it's performing, it's just a different beast, I think. So that would be my solution to the issue, but we don't have a humongous amount of time to just talk about it today. Maybe we'll circle back to this conversation, because it'll be interesting. And also it's interesting from the content perspective, right? We're all trying to figure out how to monetize and how to create the sustainable business model on chain and otherwise in this space. So I'm sure we'll circle back to it another point in time. But guys, that is the end of today's show. Thanks so much for joining us. As usual, we've ran over, but we keep running over at the moment. Some good discussions on the show. Reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour. We're live on X Video, YouTube, Apple, Spotify, and nowhere else at the moment. But that is that. Thanks so much, Legendary, as my co-host. Thanks to Stats and Funky as our core contributors today. Thanks to everyone in the YouTube comments and in the X comments too. Have a wonderful day. Take care. We will see you tomorrow. Bye-bye.